Now, joining us to speak on the implications for Nigeria as well as other economic matters is economist Dr. Ahmed Adamu. Thank you for joining us. Good morning, Mr. Adamu. Now, let's go straight into it. Now, China is the world's largest importer of crude oils. And since the outbreak, we're seeing a slash in the outputs. Now, Nigeria being one of the major, exporters of such a product, how does it affect us?
Well, understanding the fact that oil has a global market, what happens in China or with China affects the entire market. And so Nigeria cannot exclude itself from happenings around the world, political, social, and economic happenings around major countries, especially China, you mentioned, the largest importer of crude oil. And this is a social reason, like you mentioned, the coronavirus has caused the call for not honoring any delivery or supply of crude oil from major part of the exporters of crude oil to China. And I think this is because China now is a bit paralyzed because of this coronavirus. So activities have slowed down. And they think this is the way. They don't need so much energy now to really fuel those factories. Most factories are closed down, so they need little or lower demand for crude oil to fuel the economy. And I think, like I mentioned, this is a social reason. But prices of crude oil can be affected by social reasons. This could be the health issues or environmental concerns. And I'm sure not only that social reason, there are other political reasons. Political triggers for oil price changes could be diplomatic issues, could be wars, which are still around the corner. Things are happening, especially the relationship between USA and Iran and other crises in the Middle East. And apart from that, I think one of the major triggers for oil price changes are the economic reasons. One of them is structural changes of the economy. Most economies are now shifting away the mainstay of the economy from energy-intensive sectors of the economy to less energy-intensive sectors of the economy, which reduces the global demand for crude oil, which as a result will reduce the price of the crude oil. And another reason for economic reason that can swiftly change the price of petroleum or make it fluctuate is the technology. Technology enables most countries to use energy efficiently. And if you improve your efficiency and conservation, which means reduction in the global demand for oil. And if the demand for oil reduces, then the price will also come down, which is not good for Nigeria. So health issues, economic issues, political issues can make prices of crude oil come down. And we see these things happening. Apart from that, the emergence or the evolution of the alternative energies had made the demand for crude oil become sensitive to its price, which further reduces, or rather I would say increase its elasticity, meaning that demand can respond quickly or even hugely or greater to a small change in the price of crude oil. And if there are alternatives, then the demand, the preference or the domination of crude oil will now be shifted to another fuel, which means that the emergence of alternative energies are now making crude oil prices to, even in the future, plummet, to go down further, and which is not a good indicator for Nigeria. For example, the China you mentioned, they are now changing their structure of the economy, like strongly. What I'm trying to say is China were largely manufacturing sector-based economy. They produce quite a lot of things, but now they think that they didn't need to produce much, especially of their contribution to the global CO2 emission. And now they are saying that instead of concentrating so much on energy-intensive things, let's produce less energy-intensive
Dr. Adamu, let me put you on hold now. Right. When we come back, we will discuss this even further. Welcome back. Thanks for staying with us on the morning show this Sunday morning. We've been talking with Dr. Ahmed Adamu, an economist, and we're looking at the impact of the outbreak of the coronavirus in China. Thanks for staying with us, Dr. Ahmed. Now, the World Economic Outlook for 2020 by the IMF says that, taking it from Nigeria, 2.5% growth in 2020, and the global growth is expected to be around 3% or thereabout. What impact do you think this will have, not only on Nigeria's projected growth rate for 2020, but that of the rest of the world?
Well, I think this is a projection, and right now, if you look at the GDP growth of Nigeria, it's standing at 2.22% thereabout. And now looking at the outbreak of the coronavirus, this is something that was not expected. And that's obviously is affecting the oil price, which means a reduction in the Nigerian revenue, which also reduces the Nigeria's physical performance within the 2020. And like you mentioned, the expected petroleum price benchmark, oil benchmark for 2020 budget was, I think, is $57 per barrel. And last time I checked, I think last week, it was around, the prevailing market price was $54 per barrel, which is, I think, for the first time we've seen this kind of, in recent years, we've seen where the petroleum oil price benchmark in our budget is above the prevailing market price, which is an indicator that says that projection may not be possible. I mean, higher projection of economic growth may not be possible. And we look at the economy where we are just recovering now. We just need to really increase our speed. We have not really reached our normal growth rate since before the recession. And what we need to do now is to really grow very fast. But this is happening at a time when the global energy market is affected, especially oil market, is affected by social, economic, and political reasons. And all these factors are in play, and we are not in control. And they have consequences on the price of oil, and hence our revenue. And we become vulnerable, and we don't have control. If you don't have control over the price of the commodity you export, that means you don't have control over your economy. No matter how much or ambitious the fiscal policy makers are, they cannot really achieve what they want to achieve if their revenue is really going down or is not as it's expected. And this further broadened the budget deficit. We already have an estimation of a budget deficit of more than 2 trillion naira. And with this development, I think our deficit will grow bigger, even to 3 trillion naira. And that will mean that we have to borrow so much. And borrowing is not good for our economy. And we have a lot of issues we need to address. And like the government is finding itself in a very difficult situation. Like we have issues, insecurity, unemployment, inflation, and now you increase the minimum wage. You have so much responsibility. And now the oil price that you really look forward to is going down. And so this is really not good for our country at the moment. And this is one of the consequences we have to face for our failure to really build alternative sectors of our economy. And looking at the major indicators since this administration came into power, when you look at the recession we just came out from, I mean, in 2016, 17, for the first time, we need to really recuperate, need to grow faster, go back to our normal level. And if you look at inflation is still double-digit number. For example, when this administration came into power, the inflation rate was a single digit, was 9%. And it rose up to, I think, around 19%. And this happened when crude oil price plummeted down to, I think, $30-something per barrel. Yes. If you remember in 2014, after I think 2015 and 16, around that period. And you see, that's the effect of relying so much on a single commodity. And that's what happened to Nigeria a few years ago, where we just fall into recession because of the drastic reduction in oil price. And we are still at the brink of this recession again. If oil price continue to plummet this level, then we are going to fall back into recession again, because we are very, very sensitive and very vulnerable to oil price fluctuations. And this is to tell us we don't have shock absorbers. If you look at also unemployment is another indicator where you can see the effect of this oil reduction. If you look back at that period, I think right now our unemployment rate is around 23%. It started from that period when oil price went down, and after now unemployment is increasing continuously, and we have now insecurity, and these are all effects of all these negative economic indicators.
Okay, Mr. Adamu, I mean, to just reiterate what we're facing here, we're looking at consumption being slumped by a whooping 20%. That's an equivalent of how much the UK and Italy consume together. Now, my next question to you is the reps of the oil-producing cartels, this OPEC, are looking at, we know Nigeria is part of this organization and its allies. They're expected to meet this following week as calls grow for action to support these oil prices. Now, what conversations should Nigeria be having in such meetings? How do we levy off of this?
Yeah. OPEC is a very important cartel. They have been influential players in the global oil market. But like I told you earlier, the world has changed. Now the Western world, the developed world, have now understood the power of this cartel, the OPEC. And now that's why we see a lot of energy conservation, energy alternatives, and even new discoveries of unconventional oil and gas reserves, which make some of these developed countries not rely so much on OPEC supply. And we have countries like Russia, we have countries like USA now producing large quantities of crude oil, and which means that even OPEC will have to take action. The influence of that action will be not so sensitive to the oil price. And I think that's the reason why you are not seeing oil price close to what we used to call the normal range for crude oil price, $70 per barrel. And now oil price, surprisingly, is now hovering $50 per barrel continuously for a long period of years, for a period of time. So what I'm anticipating what OPEC will do in their meeting is they will try to cut down supply so that they reduce the global supply. But now we have reduction in the demand itself. So if supply is reduced in response to reduction in demand, so we are going to normalize the price. And I don't think the oil price will really react significantly to any OPEC action that might take. And even if there are actions that will call for reduction in supply of crude oil and other petroleum resources from OPEC member countries, is going to also hit countries like Nigeria, because if Nigeria rely so much on the revenue from export of crude oil, and that quantity, like in our budget, we said that we are going to be exporting around 2.1 million barrels per day. I don't think OPEC will affect the Nigerian quota because we are also one of the vulnerable OPEC member countries. So I think their meeting will not really, or any action that might take will not really significantly affect the oil price. And I anticipate further reduction of crude oil price at global market because of what is happening around the world, the environmental concern, the political issues, the social issues, and structural change issues around the world is really making oil really not that very attractive. And I think the next call, the dominating fuel will be natural gas. And I think Nigeria, we need to swiftly shift our focus from the oil now to a bit more to the natural gas. And I think that's what we need to do.
You make a very, very important point there, because all of this, the outbreak of the coronavirus and the global upheavals in the economy seem to expose the weakness in Nigeria's over-reliance on a mono product, talking about oil. And you did mention earlier that there's a need for Nigeria to begin to seriously think about diversifying its, economy, talking about other sources of revenue. Speak directly to, some of the areas that Nigeria really needs to begin to look at seriously. You've just talked about the LNG, liquefied natural gas.
Yeah. For me, as a petroleum economist, there is no time when the world will exist or economy will prevail without reliance somehow on the energy sector or energy source. And to me, Nigeria, even if we don't have the strength or the foundation to build other pillars of economy like manufacturing sector, like agricultural sector, we may not have that comparative advantage. For example, in agriculture, if you look at it, we don't have comparative advantage when it comes to technology, when it comes to fertilizer production yet. And we didn't have so much like infrastructure for transportation, packaging, processing of agricultural plant. But this is a wake-up call to know what we lack and what we can do about that. Manufacturing sector, not just producing the agricultural raw material, because we don't want agriculture to be like the sister of the oil sector, where we just produce the commodity and we sell it to the global market and we have to re-import, but we import back what we really export out there. So that's on the side. Manufacturing sector, agriculture sector are good. But let's look at diversification within the energy sector. If we, for more than 4 decades, we've been relying so much on oil, oil has really fueled our economy to this level, sustained us to this level. And now oil regime is about, from all indications, about to be displaced. And now we have to be leaders, not only just followers. We wait and see what's happening. And now we have to look at the world, what is the shift, and then try to lead and start to invest in this alternative energy sector. If Nigeria is not an oil producing country, what sort of energy source will it produce? And this brings us down to the question of natural gas. I think this is a call for diversification within the energy sector. If you can build more infrastructures for gas development, gas processing, I think gas, we have more gas reserves than oil in our country. We have the largest gas reserve in Africa, and gas can do whatever oil can do. And I think it's environmentally friendly compared to oil.
We'll have to leave it there. Thank you so much. Dr. Ahmed Adamu is an economist joining us on the morning show today. It's time now for another break.